In today's video, I wanted to do a Trading 212 portfolio update because last week I was slandered by a person in the comments saying that my portfolio had tanked and that's why I haven't been showing it. So I guess we just have to watch until the end to find out. So since my last update, everything's been kicking off in the markets. We've had ups and we've had downs, we've had Doge, we've had SafeMoon, we've had all of this stuff just going absolute bananas. So it's been a bit of a weird one. And guess what? Trading 212 still haven't sorted out their sign-ups. No idea what is happening there, and you still can't get your free share. So if you know anything, please do let me know because I have no idea what's going on. And because the free shares are not available there, you can get one at Free Trade, Stake, or CoinBase if you fancy. So link will be in the description down below, but let's get into it. So as always, we start with the biggest losers, and at the moment it is Supply Me Capital. So as you can see, it is not looking too pretty. We are down 27.5%, which is not ideal. But of course it's only 30 quid, so not too bothered. But I won't be pumping loads of cash into it because it was a bit of a punt anyway. It's a bit of a Hail Mary pass, whatever you like to call it. So I'm not going to be pumping loads of money into it. I've got 7,000 shares, and if it does creep up, then you never know, it might make a fair bit of cash. But for now, can't win them all, and we'll take the L on this one, unfortunately. The other notable losers this month are actually the freshly IPO'd stocks that I bought. So we've got Airbnb, and then we also have CoinBase. So admittedly, there's not loads of money in there. However, as you can see with CoinBase, it's gone straight down immediately after IPOing. Airbnb is down 15%. And Coinbase, wherever you are, is down 21%. The fact that they're down doesn't bother me too much because I still believe that these are the future of their industries. So with Airbnb, they managed to make a profit through this last year and a half or whatever it has been, and that's just amazing considering their business model is basically people traveling and people staying in areas or other people's houses effectively. So it's crazy that they managed to continue making money that way. As an investor in the company, it's nice. And this has been one of the biggest threats to companies all around the world. So for them to get through it pretty unscathed, it's good. We'll take it. And for me, Coinbase is even more exciting as a prospect, as an investment, because it means that crypto is becoming more mainstream, it's becoming more viable by the day. And as Coinbase is the leading crypto platform, it just allows a bit more stability, a bit more safety, and all of the above. So really good as well. The next sort of biggest one is Zoom, and it's only down 15%. So it's not a massive thing, and there's only 23 quid in there. I'm still backing Zoom, and I'm going to continue putting money into Zoom, maybe a bit more than 20 quid, but we'll continue doing that as we go. So let's move on to the winners. We've actually got an unexpected winner this month, and it's actually Wells Fargo. So in the last month or so, it's gone significantly higher, and we're up 48%. And that is with the currency exchange being 11% down, which I think is pretty crazy. We're looking good in this department. Obviously, Wells Fargo were not doing so well about a year ago. They obviously dropped because of COVID, and they didn't really pick up at all for a long while. The main reason for this was they had a scandal with some fake accounts, and they were still picking up the pieces from that, even though it was over 5 years ago. But now they brought in new management, and they're clearing up all of that mess, and they are looking forward and hopefully continuing to do what they do and make lots of money like banks do. So next up we've got Walt Disney, and we are looking fairly good there. We're at 45% there. And we do have the FX impact, which is 11% as well, obviously because it's the same currency as Wells Fargo. But I did actually make a video about how this can actually impact you, and you can basically get some deals out of this. But going back to Disney, they've got a lot of content coming out, in-house content, which is very, very important, like Netflix with their Netflix specials. Disney have their Disney specials. So they've got this Loki thing that's Marvel, and then they've got new Star Wars spin-offs coming out of their ears. So it's all go in the Disney world, and they've got loads more films coming out too, which is great for business, great for the Disney Plus subscriptions. And also the best part of the recent news is that the parks are open again. So this allows them to make lots more money, because that is one of their biggest sources of income, because if you've ever been to Disneyland, it's blooming expensive. So hopefully the parks can pull in lots of cash and recoup some of the losses that we've had in the last 18 months or so. Next we've got Apple, and we are up 26%, which is looking tidy, but this is actually considerably down from a few weeks ago because big tech has taken a big hit during the last sort of a volatile few weeks and months. So that's why it's down pretty much half from where it was last month, or whenever I last did one of these, which I can't really remember when I did. And now on to the main event, which is the VUSA. So this is the Vanguard SP 500 ETF, which tracks the SP 500. This is a way of reducing my overall risk, but it also tends to be one of my highest winners. So that just shows, can you really choose the right stocks? Should you just put all your money into the SP 500 and just let it sit and not do this? Who knows? So next up we've got Bank of Montreal, which I'm buzzing about because we're up 35%. And considering I chose this stock as sort of a dividend stock, for it to be up this much, we're laughing. And the reason that it's doing so well at the moment is because Canada is sort of opening up again. They've had lockdowns on lockdowns on lockdowns, which, as most of my audience is from the UK, you've experienced the same thing, so not ideal. But they're opening up again, so that's the reason for this sort of rally, and hopefully it continues that way. And I'm hoping one day I'll have enough invested in Bank of Montreal that they'll fly me over, because doesn't Canada just look absolutely sick? So I need to give a shout out to my UK stocks. So we've got SAC, which is up 24%, which I'm buzzing about because they're also my gas and electricity supplier, so that does actually help me. If they're winning, I'm winning. Hopefully they'll reduce the prices. Probably not, who knows. And also we've got Legal & General, which is up 26%. To be honest, I thought I had more stock in there, but I mean 37 shares at £3-ish, or less than that, less than £3 is alright, I suppose. I'll take it. But again, because they're both dividend stocks, that's pretty crazy. I'm happy with that. And what a crazy last few weeks it has been in the stock market. It's been up and down. Everything's been happening. But let's just look at my pies. So the most volatile one is the ARK Invest pie, and that is down 3%, which is looking actually a little bit better than it was last week. We've got 14p in dividends, so we'll take that. And let's have a look into the slices of the pie. So Tesla up there at the top, down 9%. Roku down 4%. Square 3%. Alphabet is holding me up, and we love Alphabet, don't we? Because they pay my bills. Thanks, Google. And as always, Zoom is down 15%, but that's fine. We'll keep going with that. And then Coinbase is down 20%. So Coinbase and Zoom are ruining me on this one, but still plenty of time to go. Who knows what will happen? I probably need to look at Cathie Wood's, what's she doing with all her stuff at the moment, because this is probably completely different to how the ARK Invest pie is looking, or the ARK Invest ETF is looking at the moment. So I'll definitely have to have a look at that. And the next one, we've got the Pie Felicia, which is my dividend pie, semi-dividend pie. So yeah, we're up 12%, looking good. We've got £8 in dividends that have been reinvested, of course, because dividend reinvestment plans are the way to go for that compounding effect to occur. And then in the holdings, we've got Apple, we've got the UK dividend S&P 500 thing, up 7%, decent. And the reason it's not a full dividend pie is because of Walt Disney. They're not actually paying their dividend anymore, so yeah, I should really take them out, but it's sort of helping it look a lot better than it is, so I'm gonna leave it in. Then we've got Coca-Cola, AT&T, SSE doing well, as I mentioned earlier, Bank of Montreal doing, and Wells Fargo, since I started this pie, 49%. Woo! Jeez! And then if we go to the main pie, so this is the big boy, it's just slow and steady wins the race, not the millionaire pie trading 2 and 2. Can't believe you made me change that. Anyway, so we're up 30%, which is looking good. £66 reinvested. This breakdown is pretty much the same as my portfolio, so I won't go over too quickly, but it's looking fairly green. We like that colour, don't we? So yeah, it's looking good. So now to reveal how my overall portfolio is doing, if you haven't already worked it out from the pies. But we are up 27.92%. so up 4 grand. So it's up to 18,500. So that is looking good, and 20k incoming. But yeah, my plan is to continue investing into these pies as always. So £150 into the main one, £50 into the Pi Felicia, and £50 into the ARK Invest. So that may change when I leave my job and do this full time and do some self-employed stuff, because I might not have as much spare cash sitting around. However, technically all that money will be reinvested into a business, so it's still investing, it's just a different type of investing and a lot more risky because I can mess it up. But we will talk about that more in the next coming weeks, so keep your eyes peeled for that. And anyway, I'm done. Hope you've enjoyed the video. If you've got some value, then like, subscribe, comment, do all of that stuff, and don't forget to get your free stocks down below. I'm not a millionaire, but I'm trying to help you come up. So peace.